Something I did want to talk to you about today is looking across both, or effectively both product sets rather than businesses. And it's this sort of blending of crypto and FX technology.
Yeah.
There's a lot of noise.
Yep.
Are we any closer? Do you see something out there that you go, actually, that quite excites me, and I think that could change how we do things?
A lot. There's a lot there that excites me, but at the moment they're all just proofs of concept.
Yeah.
So I don't think I'm talking out of turn if I talk about the JP Morgan Goldman Sachs repo that they did last year on chain. I don't think I'm speaking out of turn if I talk about Project Guardian in Singapore that involves a lot of banks and crosses fixed income and foreign exchange. I think you're well aware of blockchain projects out there, but JP Morgan have Onyx, and they've created JP Morgan Coin. So everyone's thinking about it. Citibank came out with something in November for on-chain FX. But they're all, at the moment, proofs of concept. So what problem are we actually trying to solve, and can we solve in the market? So, and a lot of it comes back down to credit. So let's talk about what we do for a living. We match buyers and sellers, trading. Blockchain isn't going to solve that for low latency markets. And I'm going to say it may never solve that. So the quickest blockchain at the moment would be Solana. And they've had issues from time to time. They can process 4 updates a second. Compare that to exchanges like us that are canceling and replacing in 50 microseconds, that are processing tens of thousands of orders per second. So not that. So where does it start? One quick stat, 17 of the Euromoney top 20 are engaged in crypto or digital asset projects.
In some shape or form, though, isn't it?
Some shape or form, exactly, and it's not even the same. But I think it all starts post-trade.
Yeah.
Just to belabor a point a little bit, blockchain can aid credit. Credit is slow in capital markets. It's slow. That limits liquidity, that limits the options to trade. If we could somehow bring credit on-chain. So just imagine that scenario where we update our credit lines with each other globally on-chain. It can be permissioned. It doesn't have to be public. Yeah. So there can be a permission view of that. And you really had a real-time view of credit, and you didn't then have to pre-fund all your banks, all your brokers, or all your trading venues, because you know there's a live, immutable record of credit. Then suddenly, workflows improved, liquidity might improve, and imagine that scenario where ownership, and that's the whole point of blockchain, that ownership can be transferred instantaneously. What are we talking about in 5 years' time? Are we still talking T+2, T+1, T0 even? Does it change the intraday FX swap market? Quite often people need to borrow dollars or euros for 8 hours.
Yeah.
The moment we have to basically be long and wrong, be long and wrong for 16 hours a day, if that's the case.
Some I'm used to.
Yeah, exactly. Me too. So I think I'm looking at all of it and saying the projects that are looking at credit and faster payments that could free up collateral, right, could really be advantageous for all markets. I think we need to move away from, and I have to move away actually from classifying even LMAX Digital as a crypto asset class. Crypto is crypto. That's Bitcoin, that's Ethereum, that's a few others.
Yeah.
What the banks are all investing in, and the asset managers and the regulators are looking at, is a new tokenized world, right? That's what LMAX Group has to focus on. I think that's what the world is focusing on, and it will start with credit and instantaneous ownership transfer. I think in all the reports last year, and I mentioned the Citibank one already, people are predicting that tokenized assets will be somewhere between $10 trillion and $30 trillion by 2030.
Yeah.
That's 5 to 15% of the world's assets. Then all of a sudden, you can see the world change, and you'll see this traditional S-curve adoption that you've seen, for example, with mobile phone usage or the demise of digital cameras to using phones for that. But at the moment, there's still a very fragmented proof of concept projects going on and no concerted push that will change the markets you and I deal in.
Is there a challenge for you there as well? Because I mean, we've discussed here you're broadening your FX offering with Curex, addition of NDFs. Sure, there's other plans. We can get to that in a second. You've got the blockchain, which still fascinates me. I wonder whether blockchain itself will become disrupted by a different technology that maybe we're not aware of yet. And it comes down to this settlement problem. Do you also need to bear in mind that the Curex business, being a healthy business, a lot of those people don't want to settle atomically. A lot of the intraday traders, they're quite happy with a window at the end of the day, but there are others who are going like, no, I need this money straight away. So does this actually just increase the complexity for you trying to run that business forward? Because you've now got very different demands from client bases.
I think smart contracts and blockchain solve those questions for everyone.
Okay.
So the people that are happy with T+1, T+2, whatever, actually the ETF's a prime example, just to jump into that, because the ETF providers are asking the market to fund it in advance for them. So what happens, in layman's terms, what happens is I go and buy an ETF, I contribute it to one of the ETF providers in advance, right? So during that day, they've asked their APs to go and buy them some Bitcoin. So they go and buy Bitcoin. Dollars are used, but it's not the dollars that I paid. They give them those dollars in hindsight. So you're back to credit.
Yeah.
So what I think is the biggest providers of credit in the world are the banks. So I don't think if you speak to a crypto evangelist, they'll go, let's cut the banks out of it. Actually, I think their opportunity just becomes bigger than ever.
Yeah.
Right? Because they are the credit providers to the world. So what will happen is they will start to credit smart contracts. Right? And they'll start to provide credit to the names, to the counterparts they're happy to do who engage in those smart contracts. Now, all that happens in the smart contract is that the ownership is transferred immediately, and you avoid this settlement risk that you see in crypto today. To be clear, somebody goes first, right? You're back to 1974 and Hustat risk that everyone avoids, that ignores in crypto, right? Whoever goes first is running the risk of Bank Hustat going bust.
Yeah.
Right? Smart contracts eradicate that because you contribute to your funds, if say it's dollars, into that smart contract. If you don't get your Bitcoin delivered on the other side, it's very simple. You just withdraw your dollars back from the smart contract. Your only loss is market risk, but you're not running Hustat risk there. So I think we can solve it. The market can solve it. But what that smart contract availability and utilization will do is add fluidity to the market. You'll have less friction in the market. It means your capital can be more efficient, can be deployed more frequently. And if you follow that all the way down, you're going to have greater liquidity in traditional assets. But it's not a case of you cannot replace crypto, tokenization, stable coins, blockchain will not replace the credit providers that we have today. And that is what makes the world go round, and that won't change because everyone still needs credit, right? Yeah. The whole world, you can't finance all the assets in the world on a cash basis. You just cannot.
Yeah. So this is the first disruptive video of 2024. So I do need ammunition for the others. So let's discuss what 2024 holds, what your ambitions are for 2024, if only to give me a stick to beat you with later in the year. I mean, 2024 for LMAX Group for a start?
No, look, I think for 2024, we need to get better at distribution geographically. So we need to do better in Asia. We need to do better in the Americas. We need to do better at selling into those segments.
Yep.
So whilst Curex, for example, was a good acquisition, I guess it's single-digit percentage points of what that market is.
Yeah.
So we didn't buy Curex to let it be. We bought Curex to build it.
Yeah.
So we need to, if you like, rationalize the tech stack and the offering to our customers so that they can match not just in New York, they can match in London, New York, Tokyo, and Singapore. And perhaps bring them new products that they don't currently trade, such as the NDF, such as crypto.
Yeah.
So we need to get better at that. We need to get better at telling the story about tokenized assets and how this blockchain technology can be useful, and how you can not believe in Bitcoin and not believe in Ethereum, but still buy into the LMAX digital product offering,
Yep.
right, which should service that greater tokenized economy and cross-asset marketplace. So, look, and back to the core product. We need to see, our target is 20% growth across all our KPIs, and that means volumes, revenues, and bottom line in each one of our products. The exchange business needs to be more relevant than ever in that segment, and it will grow by virtue of the NDFs, by virtue of the asset manager segment. It needs to grow at 20% a year. The same in digital, and the same for LMAX Global, which is our broker offering. So look, it's onwards and upwards. For me, it's 2024 as a stepping stone to our longer term targets, and you can put 2030 in there.
Yep.
But we need to be much more than just the spot central limit order book for crypto and FX in 2024. We need to be the future cross-asset marketplace.
Yeah. So what's fascinating to me listening to that, and I fully understand, I think it's exactly the way you need to go, and you needed my endorsement for that, obviously.
I always come to you
Exactly.
for mentoring, Colin.
The voice of reason, yeah. But what's fascinating to me there is, and I guess we've been talking for a lot of years, is that probably for the first time, you're now thinking much more than just trading. Mm-hmm. To achieve your goals there, you actually need to think into areas where, frankly, you and I have never really gone before in terms of discussions.
Yeah. Well, because I think actually that's informed by the conversations I've had with those big names we mentioned, right? When they're looking at post-trading, that at the moment, they feel that they've mostly solved execution. So if you looked at the solutions we sold before, we just sold execution, right? Better execution, more precise execution. Now, it's my personal view. We're not going to get past anything without talking about last look, Colin. It's my personal view that FX execution can still be more precise. It can still be measured better, and we can do a better job for all the customers. But when you look at this merger of DeFi and TradFi, the first things people are looking at are not execution. They're looking at workflow. They're looking at credit. So I need to stretch myself, and I need to stretch the company to provide solutions that aren't execution only.
Yeah, and on that point, the thing I would raise is that yes, we need to make outcomes better for the customers, but the provision of liquidity is not a cheap endeavor. And LPs have to make their money as well. And it's interesting to me that the way a lot of them are trying to do it at the moment is by being more efficient. That's they're looking, to your point, execution. We got it solved pretty much. I never believe we'll have execution solved because there'll always be something else to come along and disrupt it. But generally speaking, what they're looking at now is this efficiency gain, which I guess filters down to you.
Certainly does. And actually it changes all the time. That's probably why I'm, still in the market with all these grey hairs, is that
at least you got here.
2021 is different to 2024. I mean, I was surprised. I mean, I was a big advocate for the global code. I was certainly, I am an advocate for central limit order books. But what you've seen post the code is more bilateral disclosed trading. So why is that? But then back to that LP point, they're also looking at the efficiency, and they probably had a good year in 2023 in terms of FX, but they're changing how they price certain segments. So for the first time, right at the start of 2024, I've got some of the biggest FX brokers coming back and speaking to us and say, hey, can you help us with our liquidity and our execution? And we're like, we thought you were covered with bilateral trading with PTFs and banks. But things change. So that's always changing. That's always evolving. We can't always design that because, look, I'll be clear to you. If I'm pricing one customer bilaterally and his flow is always the same, I can probably make you a better, tighter, and deeper price day in, day out than I will on an anonymous order book. But then things change. Their customer base changes, right? The macro environment changes. So I've got to stay in there, and it's all about, if you look at what we do, any venue does, or any broker does, or any bank does, you must have a reason to keep talking to your customer. And their volumes, their flows will change year on year. We have to have a longer time horizon. If they're still talking to you, you've got a chance. Yeah. And hopefully we had some vision, but if not, we were just lucky in 2018 when we launched LMAX Digital, because there and then, even with those asset managers, for example, and with the banks, I have a reason to meet them, a reason to try and solve their problems and find out what they're really looking to solve this day, this week, this month, or this year. And it's not always, saving you $1 a million on your spot execution. And I think for the first 10 years of LMAX, that was it. If you were happy with your execution and you felt you were as efficient as you could be, then it was a very short meeting. Yeah. So now we need to find other reasons, and it comes back around. So we have different debates, as I just said about the broker, different debates with our customers in 2024 than we did in 2021.
I mean, I think the message is variety and a broader product set. Please don't ever give up on Last Look, because I'm not going to, that's for sure. So just to close out then, what would you consider success? You've mentioned your KPIs before. Yeah. Would that consider success? I mean, obviously, you do like the idea of disruption. You do like new ideas, and you're willing to chase ideas, as you've proven. What would you consider success at the end of 2024, in addition to your KPIs, if anything?
I would like to, I've got 11 months to go. So I've got 11 months to get it right. And there's a few people that work for me who know this as their KPI. An LMAX Group announcement that we have a strategic partnership with a big name on a new blockchain-enabled project would be real success. Look, the KPIs will come first. They'll always come first. Right? To all my stakeholders at board meetings and to people that read the annual reports. But for me, we've been thinking about it, and we've been talking a lot for the last 18 months. We need to be involved in something strategic that can be game-changing for the future market. Because at some stage, you need to verify and validate what your thesis is. We have a well-founded thesis for market infrastructure, market structure, and LMAX Group for 2030, 2035. We need to validate it. So one key partnership and strategic initiative is really what I'm expecting this year.
Yeah. I sense it's going to be a very interesting year, 2024, for the broader industry. So as always, great to spend time with you chatting about this stuff, David. So thanks everyone for watching. This is the first Disruptor video with LMAX Group of 2024, and we will see you again very soon.